On June 15, 2026, the world witnessed something that only a few months earlier seemed impossible. After decades of hostility, crises, sanctions, and proxy conflicts, Iran and the United States reached an agreement that could reshape not only the future of the Middle East, but also the trajectory of the global economy for years to come. The official announcement immediately sent shockwaves through international financial markets. Oil prices fell sharply, dropping below $80 per barrel for the first time in months. Traders who had been preparing for a prolonged conflict and major disruptions to global energy supplies suddenly found themselves facing a new reality: the gradual return of one of the world's largest energy producers to the international economy. What attracted even greater attention from analysts, however, was not the decline in oil prices, but the initial details of the agreement itself. According to published information, Iran and the United States will enter a 60-day period of intensive negotiations. The four main pillars of the talks include the removal of sanctions and United Nations Security Council resolutions, determining the future of Iran's nuclear program, designing a national reconstruction framework, and establishing mechanisms to monitor compliance by both sides. On the surface, this may appear to be merely a political agreement. In practice, however, many economists describe it as the largest reconstruction effort of a sanctioned economy in the 21st century. Reports indicate the existence of a $300 billion development and reconstruction plan, an amount exceeding the GDP of many countries in the region. If implemented, Iran could experience one of the largest inflows of foreign investment in its modern history.
To understand the scale of this transformation, it is important to recognize that for years, significant portions of Iran's industrial, energy, transportation, technology, and financial infrastructure have operated under the pressure of sanctions and chronic underinvestment. These sectors may now become primary destinations for international investors. Global markets quickly delivered their verdict. While oil prices declined, gold and cryptocurrency markets moved higher. At first glance, this reaction may appear contradictory. Yet investors are pricing in a future in which hundreds of billions of dollars of new capital enter the global economy, trade patterns shift, and one of the world's largest relatively closed markets opens to international investment and technology. In Washington, the U.S., administration is attempting to present the agreement as an economic victory. The vice president stated in an interview that the ultimate objective is to create a new engine of prosperity in the Middle East while reducing long-term energy costs for American consumers. The true implications of the agreement, however, extend far beyond energy markets. If restrictions are gradually lifted, Iran could become one of the world's largest technology and industrial development projects within a few years. With a population exceeding 90 million people, tens of millions of educated workers, a strategic location between Europe and Asia, access to vast energy resources, and relatively low production costs, Iran presents a combination of advantages that many international corporations may find difficult to ignore. Under an optimistic scenario, foreign investment would likely flow into 5 key sectors. First, energy and petrochemicals, where Iran could once again emerge as a major player in global markets. Second, transportation and logistics, through projects capable of transforming Iran into a central hub connecting Central Asia, the Caucasus, the Persian Gulf, and Europe. Third, information technology and artificial intelligence, sectors whose growth has been constrained for years by limited access to international capital and infrastructure. Fourth,
advanced manufacturing and industrial production, ranging from electric vehicles to industrial equipment and semiconductors.
And fifth, the financial sector, where Iran's reintegration into international banking networks could unlock billions of dollars in investment. Perhaps the most significant shift, however, will occur in the mindset of investors. For more than 4 decades, Iran has frequently been viewed in international assessments as a geopolitical risk. Today, some financial institutions are exploring a scenario in which Iran transitions from a geopolitical risk into a geopolitical opportunity. Nevertheless, the road ahead is far from free of obstacles. The removal of sanctions will take time. Successful implementation will require confidence-building measures from both sides. Political opponents in both countries are likely to attempt to slow or derail the process. Furthermore, a rapid influx of foreign capital without structural reforms could generate economic bubbles, increase inequality, and create new opportunities for corruption. The central question is no longer whether an agreement will be signed. The real question is whether Iran can seize this historic opportunity and transform itself into a major economic and technological power in the 21st century. If the answer is yes, historians may one day remember June 19, 2026 in Geneva not merely as the end of a long-running dispute, but as the beginning of a new chapter in Middle Eastern history. A chapter in which the primary competition is no longer centered on missiles and sanctions, but on capital, technology, innovation, and economic growth. Imagine this. Just a few weeks ago, the Middle East stood on the brink of a full-scale war. Now, Iran and the United States have reached an agreement. According to reports, a 60-day negotiation process has begun, aimed at lifting sanctions, resolving the nuclear issue, and potentially launching a $300 billion reconstruction program. Markets reacted immediately. Oil prices fell. Global investors began evaluating opportunities in Iran, and discussions emerged about what could become the country's biggest economic opening in decades. But the key question remains: is Iran on the verge of a historic economic and technological transformation? Or is this merely a temporary calm before another crisis? What happens over the next few months could shape the future of Iran, the Middle East, and even the global energy market for years to come.